afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets gain momentum during a volatile session of trade. IT and auto stocks are leading the gains. Bajaj Auto is among the top gainers on Nifty today after higher other income and lower tax rates have aided the company's bottom line. RBL Bank has recovered almost 10% from its intraday low. The stock had fallen as much as 18% after a weak second quarter and deteriorating asset quality. And four other Nifty companies, JSW Steel, L&T, Hero MotoCorp and HCL Technologies will come out with quarterly numbers today. Good afternoon, Neeraj. Some respite. I think we took support at 11,550 and we are back in the green now.
Yeah, and the OI distribution seemed to suggest that for the week, maybe 11,600, 11,700. Today, we mentioned this in the morning in the trade setup that the Nifty was unlikely to put some significant pressure on the index today. So quite unlike yesterday, it's not happened. And as a result of which, I think we're still doing okay. The Nifty Bank and the Nifty IT both will come up on your screen. Nifty Bank continuing from where it left off yesterday. So 1% yesterday, about 0.6% higher today as well, so good going here. Nifty IT should come up on your screen, and quite unlike yesterday's session of 4.5% of a downtake, the Nifty IT is up 1%. Courtesy, the stock that comes up on your screen, Infosys, is not doing as badly as it was doing yesterday. Let's get the heat map up on the screen. Infosys up about 1.5%, so in the green, 652, and recovered quite strongly. But the heat map by and large also giving some signs of that. Save for Bharti, which is correcting and down about 3.5% in trade. We don't have too many heavyweights which have got serious cuts. Reliance may be marginally off, and BPCL not a heavyweight but might be slightly off. But other side of that, we don't have heavyweights correcting thick and fast. But select heavyweights which are doing well. HDFC 0.87%, TCS about 1.25%, Infosys about 1.25%, and then a clutch of other names in the auto space in particular in the rate sensitive pocket which are doing well. So Bajaj, Hero, Maruti, ICICI Bank adds on to further gains, SBI up about 2.5%, and add to that Nifty IT doing okay. I think we're set for a decent next 1.5 hours. Let's wait and watch if this lasts. But the broader market trends, Devina, what are they indicating?
Well, individually, obviously, it's more, an earnings-based performance in today's session. But yeah, you've got the mid-caps and the small-caps also doing relatively okay for themselves. Closer to 0.5% gains is what you've got on the mid-cap and the small-cap indices. Mid-cap index comes up first. Our NAM is up about 9% in today's session, so that's doing extremely well. And you've got a few banks doing well. Indian Bank for 7.5%, Coromandel International, Jubilant FoodWorks. Remember, yesterday reported same-store sales growth of about 4.9%, and that really got the stock active. And today's session, once again, you're seeing a response to that. Prestigious States 5.5% higher. A few losers, RBL Bank on the disappointment on the numbers and the asset quality as well, down about 9%. Edelweiss, after seeing good gains over the last 4 to 5 trading sessions, has come down again. HEG, Max Financial, some of the other losers. In the small cap space, just to quickly bring that up as well, closer to 0.5% on the index, but MCX is the one which is doing about 5%. NCC, REITs is doing well, about 4.5%. Just Dial, a heavily owned share by FII is up about 4%. Losers, Dish TV continues to grind lower. Yesterday, another 10% down. Today is yet a 10% cut day. Welspun India, Strides Pharma is down about 5%. So these are some of your losers in the session as well. PVR is also down about 2.5%. But let's quickly also take a look at what's been happening in the F&O space. Navneet joins in for that.
Thanks for that, Davina. Well, on the Nifty futures, no major build-ups as of now has been seen, and I think more action today has been on the Bank Nifty side. As we speak, the open interest is up just about 3%. The premium is currently at about 27 points. Look at the Bank Nifty. Remember, yesterday Bank Nifty outperformed Nifty, and there was more of short covering that was seen as the open interest saw some bit of unwinding. But today there's a sharp uptick, 17% higher. Looks like around the current levels there are some fresh positions being taken on the Bank Nifty futures. India VIX has cooled off a bit, so that's some bit of respite coming by, 2% lower for India Volatility Index. In terms of options data then, what to watch out for? Remember, in terms of concentration, it is at the 11,700 call and the 11,600 put, and this is, I'm talking about tomorrow's expiry. Today the index slipped to levels of 11,550. We took some support and there was buying which emerged from those levels, and 11,600 put has added about 15.7 lakh shares, telling you there is put writing which has taken place around those levels. So So on the upside, of course, once again, the resistance remains at 11,700 and the support will be today's low of about 11,550. Stock futures very quickly. Bajaj Auto reacting positively to the numbers. On the future side, we've seen some build-up coming by. In fact, the stocks also touched its 52-week high. Volumes too rose after the earnings came by. So the stocks moving higher on good amount of volumes in the cash side is always a positive sign. Jubilant FoodWorks, fourth straight day of gain. Sequential improvement in same-store sales growth seems to be doing well. The stocks hit 52-week high and second straight day when there are good amount of long positions being taken as we speak, 23% higher on open interest. And RBL Bank, which has recovered 10% from the day's low. Remember, the low was seen in the morning session when there was a gap down opening. First there was a filter, then that circuit filter which was flexed around 10 o'clock, and right now the stock's at 260. The low was about, I think, 230 or thereabouts. Shorting, however, continues on this counter on the futures side.
Well, interesting times and a good set of data points to work with as well in terms of numbers. Let's talk about all of that and begin the show with the market voice. Srinivas Rao Ravuri, he's the CIO of PGIM India Mutual Fund, joins us right now on the show. Srinivas, good having you. Thanks so much for joining in. Good to have you on BloombergQuint. Welcome.
Thank you. Thank you.
Wondering what's your stance right now? The earnings season thus far hasn't looked all that sketchy as what people anticipated. Could it be a factor of the first few numbers looking good and then the skeletons start tumbling out?
Yeah, typically the first set of numbers are good, and in fact the second half, this 45-day period, in the second half is when you see more companies declaring relatively weak numbers. So I think we're seeing the early numbers which are reasonably decent, but market is still worried about what will happen for the entire season. I think overall expectation is that numbers will be very, very weak. I think the expectations are low, and in that context, even if you see a marginal improvement in some companies, I think market will look at it very positively.
Are you positioning yourself for that? I mean, your overall equity AUM, let's start off with that. I mean, what would that equity AUM be and how is it positioned right now?
See, at the end of last month, our PGIM India Mutual Fund equity AUM is about 1,400 crores.
Okay.
So our stance is that we will see a gradual recovery in economy. So yes, it's a fact that economy is going through tough times. It's a fact that corporate earnings are weaker than what one was expecting at the start of the year. But I think we are closer to bottom, and we will see actually things getting better from here onwards. So when we are investing in equities, we can't be having a quarter view. We have a 1 to 2 years view. When you see that, I think we'll see things getting better for both economy and markets.
What would you do in terms of rebalancing of portfolios? Obviously, we've been seeing if you had a portfolio which you built in with some weightage to large caps, some weightage to mid caps. Large caps have clearly outperformed the mid caps right now. Yeah. Would you still keep adding more large caps, or would you try to play beta a bit?
Sure, I think very interesting point. I think if you see last 1 year, Nifty has delivered about 13% returns, but Nifty small cap is down 13%. And 2 years it is down about 30%, Nifty small cap, whereas Nifty is up about 14%. So over last 1 year, our funds were essentially in high quality large cap sectors. But I would say over the last few weeks, I'm actually reducing exposure to large caps and adding small and mid caps. The reason is twofold. One, we've seen a very sharp correction in stock prices in this mid and small cap. And B, I think, when you are worried, you tend to be more on large cap liquid names. I think, and that's the reason why many stocks are trading at 60p, 80p. I think that is not sustainable. B, the moment you see earnings recovery in this mid and small cap, and when you see a little bit of comfort that we will see things getting better, and these stocks are trading at a single-digit P. So I think the risk return is definitely in favor of mid and small cap. I'm not saying that one should go overboard on mid and small cap right away, but I think compared to our positioning where we are massively overweight in large cap, I think from there we're gradually increasing our exposure to mid and small caps.
Interestingly, in a conversation with N. Jayakumar this morning, he said that I'd rather be hunting when nobody is present than be present where everyone's hunting. So to just pick and choose the smaller names which have been ignored up until now, that's probably the strategy that many have started to see.
Correct. In fact, last 6 months have been so bad for mid and small caps even on a very thin volume, we've seen stocks correcting. So we have actually developed screens where we are saying that let's look at stocks that have positive cash flows. Let's look at stocks that have corrected, let's say 40%.
Alongside positive cash flows.
Yes.
Those are a few.
Correct. I'm saying we have screens saying that A, I need positive cash flows. B, I need positive outlook on business and earnings. C, I want reasonable comfort on management. And D, if stock is corrected meaningfully, and that's an opportunity for me.
So if all those stocks check on those parameters,
Correct.
You're going ahead and buying
Exactly.
them.
Yeah.
Okay, let's talk about the space which has been in focus, rather one stock. I'm not asking for your stock view on Infosys,
Yeah.
but I was just checking. I think a lot of your funds do have weightage to this stock. Just tell us, what have you made out of the entire saga which is unfolded again with regard to corporate governance? In fact, today exchanges have sought clarification from the company asking why wasn't any voluntary disclosure made if there was some sort of receipt of whistleblower complaint. What have you made of that? In case, of course, the allegations are not proven right, if that happened, how serious can that be?
Yeah, first, I don't want to comment on individual stock, but at the same time, let me highlight. I think the point here is certain issues have been raised by a whistleblower. And if you actually see objectively, what is the financial implication of those issues? You know, what, as a fund manager, as an analyst, what I have to look at? I have to look at certain things are happening. What is the impact of this on earnings, and what is it indicates about the quality of management? If you see the issues mentioned there, according to me, they are trivial versus the stock reaction that we've seen. I think for a variety of reasons, I think this clearly highlights the panic or the fear in the market overall. I mean, you see the financial impact of issues mentioned. It is virtually nothing. I'm saying it's single basis point impact on earnings. But companies like what you mentioned are stand for a very high in terms of gold standard for governance. So when you hear even small things there, I think market tends to get worried, and people have reacted the way they have reacted. It's a fact that the co-founder is still the chairman of the company, and he's going to stay the company. So I am not so worried about what we've seen there. So yes, there are some issues, but I think when you see the overall picture, I think the impact, possible impact, if all of them are proved to be right also, I am saying the impact on earnings is negligible.
Actually, I just want to follow up on that, because yesterday we were talking to Sudhin Apte, and he said that it is not unusual for companies to get deals at lesser margins because the environment is such right now. So it's not just a problem with Infosys, it's probably a problem with the other companies as well. So in that matter, it may not raise too many alarm bells, but just the fact that it wasn't reported the way it was supposed to be reported.
And could that bring down valuation multiples?
Yeah. No, I think, you see, when you are pitching for large deals, in most cases, accountants may not know the full picture. You know, when a CEO is pitching for a large deal, you are not just looking at the numbers as they are seen here. You are saying that, okay, by winning this deal, what are the strategic benefits that I'll have? What are the levers I have on cost front? And what else can I do? How do I leverage this? I think we need to keep all those things in matter, not just saying that, okay, this deal, as of today, Excel is telling me I'm not making money whether I bid for it or not. I don't think that's a way to look at it. It's a very narrow way of looking at things.
Okay, we'll have to wait and watch with regard to what the investigations now throw up by the audit committee. But also talk to us about the banking space. Most of the bigger private banks have come out with the numbers, I believe, barring ICICI Bank. What have you made of the numbers? Has the asset quality trends improved according to you? Has the NPA cycle bottomed out? Besides RBL Bank, which is once again thrown up a surprise, though it was more or less expected post the commentary after first quarter.
Yeah, I think two things. First, only private banks have declared numbers. We've seen more challenges in PSU banks. Yes. They're yet to declare numbers. But I think it's a fact that, when you mentioned about NPA cycle, I think that is clearly peaked. There are no doubt about that. It's not just me. You talk to anybody, any expert. We've actually peaked last year, and we will see gradual improvement. If someone was expecting a stronger improvement in NPA cycles, given the new sectors, whether it is agri, whether it is MSME, I think the recovery is lower than what one was expecting, but the trend is clearly NPA cycle has peaked and we will see improvement.
That's, but obviously that is also a function of the government stepping in and saying you cannot categorize any MSME loans as non-performing assets for till next year March. So it in a way is pushing things back a bit.
Yeah, see, the fact of the matter is economy is going through a challenging period, and which in turn means certain businesses will be under pressure, and which in turn will see this NPAs being higher. So we are witnessing that, but everything is relative. I'm saying versus what we saw last year versus last year, where are we? I think the direction is clearly downward. We've seen, I think last 2-3 years, we've seen some mega accounts turning NPA. I'm saying compared to that, now we are seeing smaller problems, and that is where when you look at the overall loan book, we are saying that that cycle is actually turned.
Okay. One final question then. Within the highly valued space, where is it that you have the comfort because of either earnings visibility or the belief that valuations will not falter, that you are comfortable keeping large positioning on?
So I would say, no, I don't have comfort on any of these so-called high quality but high PE stocks.
Okay.
But as a fund managers, we have to be aware of the weights in benchmarks.
Sure.
So I think you will see positioning saying that if something is at 10%, even if I'm not comfortable, you tend to have 5-6%, you have to respect the benchmark.
Yeah, which is fine. So I'm not asking about your, okay, I'm just asking you, where would you be comfortable keeping these positions on? If you had a choice of not sticking to, would you scale some of the money off from, I'm not asking you to name stocks, but I'm just using them as reference points. The HDFC Bank, Bajaj Finance, Kotak Banks of the world, would you scale positions back from some of these names?
So if you see our portfolios, actually I've kind of reduced exposure to the high quality but high PE stocks.
High PE stocks.
And increased exposure to sectors that I'm more comfortable, like chemicals, pharma, utilities.
Okay.
Many of these utilities are trading at 5% dividend yield.
Yes. And traditionally, those have done really well. Yeah. So,
but last 10 years have been bad.
Let's see. I mean, I remember RECs and of the world, whenever they hit those 5%, 6% dividend yield, they tended to bounce back from there.
Yeah. So
just one last question, and then on these dividend yield, divestment stocks that we've been talking about, how are you going to approach that angle?
So, unfortunately, government, the largest shareholder, has not acted the way it should have. Largest shareholder should act in these companies, in the sense regular OFS irrespective of stock price. But now, the moment you say that I will actually privatize, the real value need to be unlocked. I think that's what gives me a lot of comfort. And utilities, I'm saying, these utilities have a contract, signed contract for next 20 years revenues.
Yeah, so there's earnings visibility for sure. Okay, well, we wish you all the best. Thank you so much, Srinivas, for joining in today.
Thank you for having me.
Good having you on BloombergQuint.
Great to see you.
Okay, that's the view coming in from some of the fund houses. But moving on and shifting focus to the markets, 11,623, we've maintained the gains, but there are some stocks which are reacting to its numbers, and one of them is Hatsun Agro right now. I think the stock's seen a sharp correction for the second straight day. And right now it's down about 2%. Let's move on. And they've reported, by the way, their second quarter numbers on Tuesday. While the operating performance was steady, higher tax rates and finance cost has impacted the company's profitability. Let's discuss the quarter gone by with with the managing director of the company, Mr. Chandramogan. Hi, sir. Good afternoon, and thanks a lot for joining us today on BloombergQuint. Revenues, the top line growth was nearly 8%. Profitability this time around has seen a degrowth of about 34%. Take us through the highlights and also tell us the 7% growth on the top line, how much of that is a function of volume growth and price growth?
See, out of 7%, 5% is volume growth only. Actually, the price correction came in the month of September only. Normally, whenever the price correction takes place in the month of September, there will be a small lull. More than that, August, September, we have received 110% extra rainfall, which has led to floods in the market, as well as to the rural areas where we collect milk. So this has affected us in the month of August, September. First quarter, we had 15% growth. We thought that we can maintain it, but probably this August, September heavy rains have dashed us.
Okay, so clearly the numbers have been impacted by unusual rainfall, which was seen in some regions. But you've been able to maintain your margins at about 10.6, which have come in the quarter gone by. What's the guidance that you can give us with regard to the margins for the entire year?
Be able to maintain this because next quarter probably the ice cream and curd is not our main season, but the fourth quarter ice cream and curd will pick up strongly. So we can maintain it as this percentage. But the sales is bound to go up. This is I think the 15% growth, whatever we have maintained last year, we will be able to maintain in the second half, in our opinion.
Bottom line seemed to be impacted because of higher finance cost. I think sequentially also there was a marginal uptick that was seen. Could you tell us what's the debt on the books right now? Yeah, go ahead.
Debt is about 1,050 versus our equity. Actually, probably we are going to infuse another 105 crores of the rights issue pending money in the coming month. So those things will just take care of it. The debt-equity ratio will come down. And there is going to be a sharp reduction of interest due to this 105 crores infusion also. Apart from that, the cash inflow is going to increase. We have expanded the capacity very well. So we are in a position to do something like 7,000 crores turnover if it is needed. With some minor investment, we can do it in the years to come. That is, year after next.
Okay. Mr. Chandramohan, would the promoters participate in this rights issue?
We have already participated and we have already paid the money.
Okay.
Only the balance money is going to be collected. That's it.
Okay. So can we talk a little bit more about the new plants that are going to be commissioned? I think there's one in Telangana in Q3 of FY21, and then you've got a 4 LLPD milk and milk products plant in Maharashtra that is also expected to be commissioned by February 2020. Could you highlight some details for us of these individual plants?
Actually, we are actually going to have 2.5 lakh liters of milk and 1.5 lakh liters of curd in Maharashtra, Sirsi. This is going to come in the month of February end or March first week of this accounting year. This will start commissioning. Telangana project is likely to commission by the second half of the next year. So Telangana project is going to be 200 crores. This is about 125 crores. Sirsi.
Telangana is also milk and curd, or that's another product?
That is only dedicated to ice cream. No milk and curd.
Okay. Overall, what's the outlay for expansion that you've put out for the year? I mean, this is 200.
This year it will be 450 crores.
450.
This year 450 crores will be the expansion.
Are you adequately funded, or would you need some external funding?
No, our depreciation is a major cash inflow for us. We have close to 200 crores depreciation, and this 105 crores is coming in from the rights issue. There is internal accruals. We have got enough cash. There is no issue for us.
Mr. Chandramohan, just one question. I see your tax rate as a percentage of PBT moving up in this quarter. Why has that happened, sir?
Sorry? Get me again?
The tax as a percentage of the profit before tax rate has gone up, I believe, to 37.2%, if I'm not wrong. Are my numbers correct? Because I thought taxes have gone down post the corporate tax.
We have got the MAT credit. In reality, we are paying a lesser tax.
Okay.
But we are actually providing the tax that are required.
Okay, fair.
Our effective tax rate is we have got a MAT credit of about 38 crores. And till such time that the credit is available, we are enjoying it.
Okay.
Cash outflow is not what the tax is.
Okay, so let me then try and, from an accounting perspective of what Hatsun Agro as a company could do in terms of revenue growth and profit growth in light of the plans that you have and in light of the tax cuts that have been announced by the finance minister. What do you think you will end the year with, sir?
No, this year probably we are not going to get into that 25% tax slab because we have got the MAT credit. We have to make use of it. So going forward, probably the growth rate will be maintained at 15% for the second half of the sales. And the PBDAT levels can be maintained. That's it.
Sir, one last question from my side. I mean, with regards to some market concerns which suggest that it is difficult for private dairies to raise EBIT margins beyond 8 to 9%, considering cooperatives operate on wafer-thin margins. In that sense, do you feel that your margins also could be a bit more curtailed to match those of cooperatives?
No, in fact, probably our margins have improved over the period, and probably it can improve further. See, we are not only into milk, we are also into ice cream, we are also into curd. we are also making frozen pizza. So comparatively, we have got a basket of products. And again, even on milk, we have got regional factories, and we also command a premium over the cooperatives. We are not charging the same price. As most of the people say, it's not commodity. When a lady housewife buys the milk, she is looking at a brand, and probably for a brand, we are in a position to command a premium.
Are you seeing a bigger shift towards organized players like yourself?
I don't see any major problem of compression of margin. See, the margin compression happens because the overall kitty, the milk powder business and other things have got a lesser margin. Otherwise, probably we could have got an even better margin, I can say.
All right, Mr. Chandramohan, thanks very much for joining us. Really appreciate you taking out the time, and all the best for the upcoming quarters.
Thank you.
Management of Hatsun Agro Products talking about the performance, saying that they're able to maintain margin performance at a higher rate compared to some of the other cooperatives as well, because of obviously consolidated margins across various product lines. Stock's not doing much, 2.5% lower.
In fact, a lot of these dairy players have been focusing more on the value-added products, which give them that fillip with regard to blended margins moving higher. But having said that, we're talking about earnings. One of the Nifty companies, that's Bajaj Auto, reported second quarter numbers today. The net profit rose about closer to 22% on back of operating performance and other income. Yatin Mota is here to take us through the numbers. Yatin, what stood out in the numbers?
Navneet, if you look at Bajaj Auto, clearly it was a big beat versus the street expectations, especially on the realization front. Let me run you through the numbers first. If you look at the revenues for Bajaj Auto, that came in low by about 4% to come in at 7,700 crores. This is 200 crores more than the street expectations. More importantly, if you look at the net profit, that also saw a jump of nearly 21%. Despite the fact that the street was anticipating a flat kind of a profit growth. Of course, two factors here. Number one, as I mentioned, strong operating performance because of better realizations. And number two, the tax rate, was lower. Remember, most of these auto companies do pay full taxes, and with the new government, announcement on lower corporate tax rates, the Bajaj Auto has already started accounting for those lower tax rate at close to 25%, and that also has aided the profit growth. Margins also came in at 16.6%. On a sequential basis, this is higher, despite the fact that the street was anticipating a lower margin. So the clear realization growth has aided the performance here on the operating front. If you look at the realization per unit, that stood at close to 65,670 rupees per unit versus a level of 60,000. That is a growth of nearly 9.4% year on year. The brokerages were only anticipating a 3 to 4% kind of realization growth, and the company delivered 9.5% kind of a realization growth on the back of better export realization as well as better domestic product mix. And on an overall basis, despite the domestic motorcycle volumes being lower by about 25%, the export markets were buoyant during the quarter, with a 7% growth coming in for the motorcycle business. And if you look at the overall retail share of motorcycles, they grew significantly to a level of 20%, which was about 18.5% few quarters back. So clearly on the back of better retailing in the domestic market, they have been able to gain market share in Q2 as well.
All right, just want to pull up Inox Leisure. It reported its Q2 numbers just moments ago, and want to see how the stock's doing, because at least optically the numbers look more than okay. The stock's up about 1%. It's come off from the lows of the day. Revenues are up 42.3%, while the profits jumped 3 times. Came in at 35.1 crores versus 12 crores, while even the EBITDA shot up 3.7 times at 167.7 crores versus 44.8 crores. Margins stood at 32% versus 12.5%. So you are seeing that uptick, for Inox Leisure. But nonetheless, remember, both PVR and Inox have maintained that this period of economic slowdown has really not affected moviegoers that much, and the content pipeline is actually pretty strong, which is nonetheless attracting the footfalls that are coming in for them. So Inox Leisure now up about 2% at 363. We were talking about Bajaj Auto, but Hero MotoCorp is the other one. Muted auto demand over the past few months is likely to weigh down on the numbers of Hero MotoCorp as well. Yatin, he's still here with us. Yatin, run us through what's expected.
Devina, like Bajaj Auto, this time in the second quarter, Hero MotoCorp also saw a decline in the domestic market sales and overall sales. In fact, the wholesales for Hero MotoCorp were down by nearly 21% year on year, and that will clearly impact the revenue growth and the profit growth. Revenues are expected to be low by about 17%. EBITDA on absolute basis also seen low by around 26%, and profits seen at close to 775 crores. That again will see a decline of nearly 21% year on year. More importantly, the margins, are something we will watch out for. 13.6% is the kind of, Bloomberg poll number which everybody is watching out for, versus a level of 15.2% last year. Clearly, apart from the earnings, the management commentary on the rural demand is something very important that we'll be watching out for. Companies like HUL have already, reported numbers, and they have been talking about rural consumption slowing. Hero MotoCorp is also one of those frontline companies which has a strong rural presence, and the commentary there, as well as, on the scooter business, is something important that we'll be watching out for apart from the earnings.
Right, Yathin, thanks a lot for bringing that update for us. We'll wait by for the numbers of Hero MotoCorp. But meanwhile, just look at Kajaria Ceramics as well. The numbers are flashing there at the bottom of the screen. I'm not sure if there is any sort of one-off, because the bottom line seems to be flat for the quarter. In fact, it's down 1%, but there's a sharp bump up that has come in with regard to bottom line, which is showing an uptick of about over 80% this time around. The stock, however, has not reacted too much. Initially, there was a slight bit of blip when the numbers came by. 714 crore is the top line that they've reported. The bottom line is at about 93 versus 50 crore, so definitely there's a big jump. Okay, there's an element of tax, so deferred tax, there's a write back of about 28 crore. Probably that's the reason why you are seeing that sort of boost when it comes to bottom line of the company, but top line performance remains muted. Moving on and staying on with the earnings, which are slated to come today, HCL Technologies is expected to post a healthy growth in the second quarter as it fully recognizes revenues from the IBM products acquisition. Agam Vakil is standing by with what the markets are pricing. And Agam, over to you.
So in comparison to its peers, we're likely to see sharper growth for HCL Technologies on the back of various acquisitions coming into play. To start off with the headline numbers, we're likely to see about 4.4% sequential growth in dollar terms, and in rupee terms, we're likely to see a growth of around 7%. Well, we are also expecting margins to expand to around 18.5% against 17.1% sequentially. The quarter-on-quarter 14.7% growth expected on the bottom line. Now, we will have the full impact of IBM products which the company acquired in the last part of 2018 to come into play as far as revenues are concerned, and that's the reason why revenues will look a tad higher. The revenues will be driven by IBM-led R&D and platform businesses. We also are likely to see some amount of momentum build as far as infra management services is concerned. Cross-currency headwinds are likely to limit the US dollar growth, but it's been a mixed picture, as we have seen in case of a lot of its peers as well, because we have seen the rupee, while it may have moved one way against the US dollar, it has moved the other way when it comes to, well, euro and several other currencies in question. As far as guidance is concerned, we're expecting the company to maintain its outlook when it comes to its revenue at around 14 to 16% in constant currency terms. Operating margins also expected to be maintained when it comes to guidance at between 18.5 to 19.5%. We are likely to see an organic growth for the company to be at around 7 to 9%. What are we keeping an eye on? Well, updates and further plans for products and platform businesses. Digital revenue growth, specifically in this case, we are also watching out for how Mode 2 and Mode 3 segments have done for HCL Technologies, and also if there is any impact when it comes to the corporate taxes on, well, the company's profitability going in. On the whole, it's going to be a steady set of numbers for HCL Technologies in terms of expectations.
All right, that's a quick update on what is expected out of HCL Tech as it reports its numbers today post-market hours. The economic slowdown may reflect in Larsen & Toubro's earnings as well. The engineering to infrastructure giant is expected to report muted growth in the September quarter, with weak execution in both domestic and international markets. Darshan Mehta is standing by with what the markets are pricing in. Darshan.
Yeah, so 10% top line growth is something that we're seeing, 4% bottom line degrowth, and a 7% growth on the EBITDA, which means EBITDA margins are slightly weaker than what we saw last time around. Now, in terms of the order inflow, in terms of the orders that they've given, the range that they've given is anywhere between 30,000 to 50,000 crores, so close to 40,000 crores of order or somewhat higher can be anticipated this time around. Infrastructure execution has been weak. First of all, there was the national election, then came the state elections, and there were issues as far as international orders were concerned because of issues of trade wars that were going on. So execution and revenue will be a big risk for L&T. Other income will be lower this time around, which will lead that profits probably might come in slightly lower. Working capital is the key monitorable this time around. What will be more important to watch rather than the numbers will be the commentary in terms of the revenue guidance and the order inflow guidance. Usually they do make some changes in the second quarter. They didn't do it last year, but almost 4 to 5 years straight before that they have been cutting guidance. So that will be more important to watch out for L&T this time around.
All right, Darshan, thanks a lot for bringing that update with regard to what to expect from L&T. But I guess JSW Steel will be reporting its numbers today. In fact, the country's largest steel maker will come out with its numbers in a while now. Sluggish demand and a drop in steel prices are expected to weigh on the numbers. Nikki Mirchandani is here to take us through the details this time around. Nikki, what are the key expectations this time around?
So it's going to be a multi-quarter low profitability for all the metal companies, and JSW Steel is going to be no exception to that. We're not typically looking at a good set of numbers. Top line, we're expecting a 17% decline there in terms of profitability. We're expecting a sharp slip of around 70-odd%, more than that, 75.5% year-on-year basis. Operational performance is also expected to take a hit. We're expecting a decline coming in at 43%, on account of which margins are also expected to shrink. Having said that, let's look at the consolidated volumes there also. Since you just mentioned that we're expecting weak demand coming in, we're expecting an 11% drop in consolidated volume. Standalone volume, there is a no different picture there, a shade lower. The numbers that we're working with is around 3.65 million ton, which is a drop of around 8% year-on-year basis. And one key parameter or one key number that we like to keep an eye out will be the standalone EBITDA per ton performance, which is expected to be around that 8,000 rupees per ton kind of a level, as compared to nearly 12,000 that we saw in the corresponding quarter. What essentially goes behind the making of these numbers? The weak demand, and you just suggested that steel prices have been on a declining trend. Traditionally too, Q2 is a weak quarter. Having said that, we're expecting some sort of lower input pressures, cost pressures to kind of, negative, offset the partial negative impact seen by the realization. That could be some amount of solace for the EBITDA per ton performance, given that domestic iron ore prices have come down, and we've also seen coking coal prices pressures easing off. On account of that, some solace on EBITDA per ton performance, but net still disappointing set of numbers that we're expecting 33% downticks in the unitary EBITDA performance. Back to you.
All right, and we'll wait and watch for JSW Steel, most likely to come out prior to market closing. The stock's already near the high point of the day, about 1% higher. Manav Chopra of Indiabulls Ventures is joining us on the show. Along with him, Ruchit Jain of Angel Broking is also there with us on the technical side. Gentlemen, good afternoon to the both of you. I'll start off with you, Ruchit. What would you do on the index now? We're at about 11,600 and not yet scaled those intraday highs of the day that the corporate tax cuts were announced.
Yeah, hi, very good afternoon. Although we have not scaled those highs, but if we look at the recent historical data, then after forming a good support base around 11,100, we have seen an up move supported by broader market participation. So the short-term trend is still positive, and even the Bank Nifty, which previously has shown some underperformance, has finally given a breakout during last week. And in last 3-4 trading sessions, we have also seen some good participation from the banking index. So we are quite positive on the markets. If we look at the options data, 11,500. And now seem to have formed a support base for very short term, since good amount of put writing has been seen at 11,500. Even today, if we see in the intraday in the morning hour, when there was a minor dip, then the dip around 11,550 has been bought into, and we have seen some again a pullback move from there. So I believe that 11,500 would continue to act as a good support. So one should continue to trade with a positive bias on the higher side. The first targets would definitely be around 11,700, and once we get a breakout above 11,700 mark, then 11,800 is the short-term target area to watch for.
Okay. Manav, what about you? Your index calls?
Yes, see, the markets have already seen a good rally from its recent lows of 11,100, and we had mentioned a couple of times that 11,100 was a crucial levels, and from there on the levels of 11,600, 700 more or less has been achieved. The September highs of Nifty, which is close to 11,500, I believe that could be the next hurdle for the markets. And since we've already rallied in last couple of trading sessions, I sense there could be a short-term pause or a consolidation before we see a break on the upside. So any trader who's holding to their long positions, I believe a good time to book some partial profits, probably re-enter at lower levels. On the lower side, the Nifty would be having support at 11,400 to 500, which also coincide with short-term averages. So there is a very high likely chance we would be breaking the indices on the upside, breaking the September highs and eventually move towards the 12,000 levels. But before that, there could be some short-term consolidation and eventually breaking on the upside. The oscillators on the higher time frame continues to remain quite positive. In fact, Bank Nifty has a lot of catch-up to be done. But since it is trading and closing above 29,000 levels, I sense that is one of the most positive triggers for the banking index, at least for the near term. So bank index would definitely be a buy on dips approach. The support for the bank index would be around 29,000, and we expect bank index to see levels of close to 30,500. But overall, I think bank would be the sector that one can definitely look to maintain a buy on dips approach.
Okay, so that's the technical call coming in on Nifty as well as Bank Nifty. Let's bring in our fundamental guest also. Neeraj Dewan of Quantum Securities joins us on the show now. Hi Neeraj, good afternoon, and thanks a lot for joining us once again on the countdown show of BloombergQuint. I don't know if you track RBL Bank, but there's been a sharp recovery that we've seen from the lower levels that were seen at least in the opening trade. The stocks recovered nearly 15% intraday. The numbers, of course, were not good. The bottom line was impacted due to higher provisioning, and asset quality trends are not looking great at all. Credit cost for the quarter has gone up. Just asking, because there's been a sharp recovery at lower levels in terms of valuation now, do you find any value in this counter?
Yeah, good afternoon. Yeah, though we don't have an active coverage on RBL Bank, but we do have a passive coverage, so we do track the stock. But I think the stock price movement has already been reflecting the kind of stress which would have come in the results, and that's come in the results also. The only disappointing thing was that the stress was little more than what they were guiding for. So I think that's why we saw some decent selling coming today also. But I think in the current price, it is actually the stock price is reflecting the kind of stress which is there. So at current price, I don't see too much of a downside for the stock. If one wants to buy fresh into the stock also, I think if one has a little longer term perspective, even the current price one can add, because now I think whatever stress is there should be the worst, which is already priced into the company, into the bank's price.
Okay, remains to be seen if worse is priced in or not. But remember, the stocks actually corrected after the first quarter numbers. Around 40-50% correction had already come by when the management had given guidance that their credit cost will be going up, and more or less they've provided for that provision. I think 800 crore was provided for the quarter gone by out of the 1800 crore. We'll get you technical check on this one, but before that, let's get you the technical ideas, the stock specific ideas from our experts. Manav, coming to you, which are those individual stocks that you're recommending in trade this afternoon?
Yes, my first buy call is on TVS Motors. In fact, we've seen the stock and the auto as a space being a good outperformer in last couple of weeks, and TVS Motors on the monthly charts, after forming a morning star pattern, has seen a good breakout, and there has been a good follow-on rally, which definitely indicates that the bulls are again gaining the control. The volumes too have been confirming with every rise, and after a good long time the prices have also managed to close above long-term averages. So I sense there is a short-term to medium-term structural change which has already taken place in the stock, and eventually we could see some near-term more up legs going forward. On the lower side, recommend a buy into this. A stop loss can be placed at 450 for an upside target of 510. My second call will be a buy on Tata Power. In fact, this is more or less a contra bet if you are to seeing it on a larger time frame. Since 2007, Tata Power has been a good underperforming stock, and we haven't seen much of a momentum or any rally, but there are good evidence in past few weeks whereby it concludes that the prices have formed a short-term to medium-term bottom, and eventually a good move of 15-20% from the current levels cannot be ruled out. It also has a very good risk reward and is forming a minor higher bottom on a smaller time frame. So this definitely indicates a good risk reward and a bet at the current zone. Tata Power can be a buy with a stop of 58 for an upside target of 70.
Okay, Brichit, what about you? Which are your top trading ideas?
Well, I have a couple of buy recommendations. First is a buy call in Tata Motors. Well, after a long underperformance, we have seen that last 3 or 4 months the prices had consolidated in a range, and the trend but in last 3 or 4 months has changed from down to sideways. Now, if you look last few trading sessions, then from sideways trend there is a first high top high bottom structure which can be seen on the daily as well as the hourly chart, and hence for near term we believe that the momentum could continue to be on the positive side. Now, in last 5 or 6 trading sessions, the 20 days exponential moving average has been acting as a support, and today's low again coincides around the 20-day exponential moving average. So for a pullback move or for an up move towards 140 to 144, we advise going long in Tata Motors with a stop loss below 123.50. And my second pick is a buy call in Kansai Nerolac. Broadly, the paint stocks have done quite well in last few months, and the kind of outperformance that the sector has shown, there are no signs of reversal, and Kansai Nerolac has just given a breakout above its immediate resistance of 520, 525. So I think from the paint sector we should see some catch-up rally in Kansai Nerolac in near term. So from a near-term perspective, one can go long with stop below 514 for target around 580.
Let's pull up a Titan. I just want to look at that stock, and I believe it is the 10th straight day of gains, 9th straight day of gains for Titan, and the stock is at a new life high, 1352 on the counter. Remember the day it gave its quarter 2 update where it said that there is some bit of sluggishness with regards to jewelry volumes, and the overall market sentiment seems to be slightly weak. That's the day that you saw some amount of weakness, but you've seen that stock, I think it was 8th of October. From there, stock has actually started, a one-way climb. And in today's session at 1352, remember, a lot of brokerage houses have maintained a strong stance. And if you get the ANR function going of Titan, majority of the analysts that cover this company have placed targets of closer to 1400 plus on the stock. The management is pretty confident that going forward, those targeted volumes will be achieved, and the overall business with regards to their new venture, which is their saris business, is most likely going to take over their watches business as well, from the commentary that we got from Mr. Bhaskar before he retired. And that's the, it's actually a negative return potential, so it's already rescaled quite a bit of a price move as compared to what the analyst had been recommending. Neeraj, what would you do with the Titan? Obviously, this is a strong stock to have in your portfolio, and we already have it, you're lucky. But if you don't, what do you do now? When do you add? Is this the right time to buy into it?
Yeah, what you said it actually, it's a portfolio stock. So you should have it in the portfolio. If you don't have it, I think you should wait for opportunities, because you do get opportunities there. Some disappointment because expectations built up, and then the results, or sometimes the volume growth is not what the people are expecting. So, but at this price, I don't see too much of an upside. Even if you're talking about a target of 1450, 1500, also upside is limited at these levels. So I would rather wait and buy this stock only at opportunities, though I'm confident that the growth over the next 3-4 years will be strong and will continue, but this is not the price, because valuation wise it is very expensive to buy at these levels. So I would rather be comfortable buying it at least at 10-15% lower than these levels.
The fundamental side, Manav, on the technical front, obviously you have no reference point now for Titan because it's at record highs. But at 1352, is there more headroom left?
Yes, in fact, the prices have been in a very strong momentum rally. It has come into a new zone altogether. So the trend definitely establishes some more up legs going forward. I would only suggest that the important support for the stock right now lies around the levels of 1320 to 1330 on the lower side. So any short-term pullback rally would eventually witness some good buying actions. We haven't seen any lower lows or any recent move that has breached its recent lows, so that should be your trail stop loss. So anybody holding long positions, a stop of 1320 on the lower side should be there, but we expect this momentum to see some more upside. There has been good volumes also even at the current zone, so we maintain our upside target at least for the near term close to 1400 to 1430 with a trail stop loss of 1330 on the lower side.
Okay, that's tight in trading at its record high levels, and every time the stock falls, there is buying which comes at lower levels. Remember, this has been the biggest beneficiary of shift from unorganized to organized market post demonetization and post implementation of GST. But I also want to mark Maruti. Pull up the intraday chart. The stock's trading at the highest point of the day. I think the earnings come out tomorrow for this one. There is seen some bit of buying interest ahead of the earnings on Maruti. Remember, Bajaj Auto numbers were better than what the street was expecting, and from the auto space, we will wait by for Hero MotoCorp's numbers. Neeraj, in terms of the auto pack, Bajaj did better than what the street was expecting. Of course, lower tax rate also aided the bottom line, but the average selling price that did see some bit of bump up on a sequential basis. Maruti will be coming out with its numbers tomorrow. Looking at the slowdown, the falling sales numbers that we've seen in the last 11 to 12 months, do you think now is the time that one should start nibbling in when it comes to the auto stocks, or you will wait by?
Actually, I had been recommending some auto stocks, so I was positive on Maruti and TVS Motor, but then both the stocks have seen some momentum, and they've seen some upside momentum. So the current price, I would rather wait to see some sort of correction happening, because of like Maruti is one where the results will not be that great. So I think that can be bought at some sort of disappointment comes and some correction. TVS Motor, I think at the current price also, though the stock has moved up, I feel that the momentum will continue. So one can hold on to TVS Motor if they invested earlier. And to buy these stocks, I think after you've seen this kind of upside momentum, one needs to wait and see some correction before they enter. But I'm positive on both Maruti and TVS Motor with a long-term perspective.
Okay, that's the view coming in on the auto space. Richard, on the charts, Maruti, would you take a bet here at current levels?
Although the trend is positive, but one needs to see that the prices have already moved down significantly higher. A very sharp up move has been seen in last few weeks. So I would tend to continue my existing long positions if bought at lower levels on the higher side. 7600, 7700 range would be seen in near term. So one can follow a trailing stop loss method by keeping a stop below 7150 now. But I won't take any fresh long positions after the sharp up move, considering that the risk reward ratio is not very favorable.
Just stay on with us, gentlemen. Lots more to talk to you about. But one stock we need to focus on is Asian Paints. The paint maker held a conference call earlier today after the company announced its double-digit volume growth for the 7th consecutive quarter. Yash Upadhyay is here to give us an overview of what the management had to say with regards to this con call. Yash, obviously, while we're talking about the volume growth, this necessarily not come in with regards to the main business, but from the lower margin business, which affected realizations also.
That's right, Devina. So while despite of the overall slowdown that the economy is witnessing, and Asian Paints is one company which continues to always maintain the fact that they would grow in tandem with the economy, but this sector in particular, not just Asian Paints, has managed to beat the slowdown, and for a 7th consecutive quarter we saw the company report a double-digit volume growth, although this time around it was lower than what they did in the first quarter of FY20. So that number stands somewhere around 14 to 15% is what most of the brokerages are estimating. However, it came at the cost of margins, as this time around we saw higher sales of their distempers and putties, which is generally their low margin or the economy class of products. Now, the painting cycle too was impacted because of the extended monsoons. We've seen that there was the delayed monsoon at the start of the season, and then it has continued to progress through several of the other states where there were also floods that took place, which impacted the overall painting
cycle in the country this season around, and this was particularly witnessed in the south as well as central regions of the country, while north remained slightly better according to their company. Now, what has driven this strong double-digit volume growth is the tier 2, 3 and 4 cities, which is the non-urban or the non-metro cities, which continue to do well for the company, and this is where their growth strategy is. So going forward, they expect these areas to continue to do well, and their focus is right now on the lowest or the bottom of the pyramid, which is these entry-level segments. So we could continue to see some amount of pressure with respect to margins, but an additional comfort is the fact that the crude oil prices have been benign, and the company has passed on these benefits to the customers. So in the second quarter, they have cut down prices by about 0.4%, and this is over and above the 0.4% price cut that they took in the previous quarter. So cumulatively for the first half, they have cut down prices by about 1%, but we have seen that big erosion in terms of value growth by almost 6% because of the sale of Distempers and Putty. Overall, the management maintains a cautious demand outlook. They have a wait and watch approach with respect to assessing the demand post the festive season, but typically the second half of the season is generally better. The product mix also improves is when most of the high margin or the emulsion paints, they see higher sales taking place, and that should push up their margins going forward. But currently the management remains cautious in terms of outlook.
All right. Also just keep in mind that we got a sense of this, earlier on, because this time around with the rains, there wasn't much expectation with regards to fresh purchases and fresh orders at a dealer level. It was more so clearing of inventory that was anticipated to take place post the rainy season, which is generally a slight bit of a lull period for some of these paint manufacturers. But nonetheless, Neeraj Diwan, what's your take on the paint companies, Asian Paints, Berger Paints, Kansai, Nerolac?
Yeah, I think if one is holding on to these, I think one should hold on, because we saw decent volume growth coming in Asian Paints. So the margins were a little bit under pressure, but the volume growth is good. So if one has the appetite to hold on for a long term, I think they are the stocks which one should hold on to. But to buy at these prices and these valuations, I'll not really recommend someone to be chasing them at these values. But of course, they are stocks which can be bought on dips, and you should hold on if you already have them in the portfolio.
Okay, another portfolio stock, that's Asian Paints, and transparent commentary coming in from the management itself. Let's see how the operating performance pans out moving ahead, considering they're focusing on lower margin products. But Neeraj, before we thank you, is there any stock idea that you would like to share with our viewers?
Actually, I'm very positive on financials. So, though I'm positive on PSU banks like State Bank and Bank of Baroda, even in the NBFC space, I feel there are good quality companies available at decent valuations. So one example of that would be Cholamandalam, where I feel the management and the pedigree of the company is very good, and you're getting it at less than about 2 times book value. And normally this stock trades at 3.5 times 1 year forward. So I think this is one company which you can look at investing at these prices also.
Okay, so that's a fundamental buy call coming in on Cholamandalam. Neeraj, we leave it at that note. Appreciate you joining us today and taking us through your views on individual stocks and also on the markets. Having said that, I think the markets have also given up the gains that we saw when we started the show. So we're just about trading flat for Nifty. There was some selling pressure. Actually, on every pullback, you're seeing fresh supply coming in. Bank Nifty is just about trading flat around the mark of 29,400. Richard, any STBT or any BTST that you have for us for tomorrow's trading session, looking at the current rates or on index or on any individual stocks?
See, on index, rather than doing just a BTST out there, I'd like to give a recommendation for next 4 or 5 trading sessions. 11,500 to 11,550 range is a very good support on a spot basis. So in this range, around 11,550, one should attempt a fresh long position in the future segment, keeping stop loss below 11,480, and expect again targets around 11,700, followed by 11,800. Among stock specific idea, Mahindra and Mahindra Finance is one stock that we believe that could show some good pullback move in next few trading sessions. In last 3 trading sessions, you see that the stock has shown a pullback move supported by good volumes. Today it has retraced some of those yesterday's gains, and prices are trading quite close to its short-term support now around 326, 327. So keeping a stop loss somewhere below 324, one can create fresh long positions in Mahindra and Mahindra Finance for target somewhere around 360.
Okay, we'll let you go on that note, Ruchir. Thanks very much for joining and appreciate you taking out the time. Quick look at the numbers of Havells, which are flashing down on your screens. I think the only number right now is the profit number of 181 odd crores. Expectation was 202 crores. So it's come lower than street expectation. Revenues were expected to come in at 2,373 crores and revenues have come in at 2,230 crores. So revenues also fallen a bit short in terms of the analyst expectation, and so has the profit. We'll wait and watch as to what the margin numbers look like. Last quarter they clocked in about 10.2%, which was still lower than the average that they've been seeing, closer to 11.5, 12.2. That's the range we've been seeing the last 4 or 5 quarters. They breached 11 in terms of their margins yesterday. So we'll see what it brings up in this quarter's numbers as well. All right, Syngene International's earnings missed estimates for the September quarter. Profits surged more than 60%, but that's due to an exceptional gain. To understand the numbers in further detail, Darshan Mehta had a chat with the CEO of the company. Listen in.
We're pretty happy with the performance for the quarter. 11% growth was bang in the middle of the range we expected. And as I commented to, I think to your last quarter, we thought we would see sequentially through the year a step up in those revenue growth rates. It's certainly what our plan requires. And we're very happy, therefore, that we saw that in the second quarter with growth rates stepping up a little bit, 4% in the first quarter, 11% revenue growth in the second. And I think that's a good indicator of what we need to do in the second half of the year. Certainly the momentum we've built up this quarter positions as well to deliver that. So I'd expect to see that continued sequential improvement. And I think on a full year basis, we'd signal that high teens, maybe even getting towards 20% growth rate on revenue for the year is possible. A lot more to do. We're only halfway through the year, but the second quarter puts us in the right position to be able to do that.
What about the development services business and the dedicated R&D center that showed consistent performance over the next 2 quarters? Can we expect sequential growth to come in here also?
Yeah, I mean, my comment on the 11% stepping up is for all 3 of those together, i.e. all of our business verticals continuing to make progress. I wouldn't separate, one out from the other. It's a combined effort, and that pretty much was the story of this quarter. I think Discovery Services in the second quarter led a little bit, but we did see reasonable performance from the Development Services Group and the dedicated centers. And we need that through the second half of the year, but that's the sort of momentum we've built.
Gross margin declined both on a year-on-year basis and a sequential basis. What are you looking at to get this number up again?
Yeah, I think that's just an element of mix. There's a natural variability depending on what work you're doing for which client. I don't see anything significant in it. In general, I'm happy with the margin profile of the business. It's pretty much in the range that we've delivered every quarter for the last 5-6 years, whether you're looking at gross margins down at EBITDA or through to PAT. It's pretty consistent and sustainable. And I'd also point out that if you look on a global peer group basis for our industry, our margins are above average. We're getting on upper quartile performer, and I think that reflects the sophistication of the services and the value we create for our clients. So I'm not going to make a line-by-line edit comment on gross margins and through the P&L, but in general, we're pretty happy with where we are on our margin profile.
The first phase of the new research facility at Hyderabad has become operational. What's the scale-up plan for this facility, and what can we anticipate here?
Yeah, so phase 1 is 50,000 square foot of state-of-the-art laboratories. We did a soft launch in August. We'll build that momentum over the coming quarter. We'll take up to about 150 scientists in the first phase, and then I think we can double beyond that pretty quickly, should we need that in terms of meeting client demand. So there's a tactical element. It gives us quick capacity to grow into if we're seeing good market demand for those services. And then longer term, there's a more strategic element to having that footprint in Hyderabad. It's very good from a business continuity point of view. It gives us twin centers, two centers of excellence around discovery services. We already have one here in Bangalore, and if we build over time a second one in Hyderabad, it makes us that much more robust and resilient as a business.
What's the strategy for new client addition? How are you looking to target more of them?
Oh, I think that's the same as always. That's about getting out and meeting people, being visible in the marketplace. And you can see that in the P&L over the last year and a half. We've been prepared to invest a little bit more in our business development group and in branding and raising our profile. And it's a synergistic investment. You put that hard work in with the expectation that it maintains the good growth profile that we're seeing. So the 11% growth in the quarter reflects the hard work from our business development teams globally.
Are you looking to step up R&D expenses this going ahead?
Yeah, I mean, remember we're a discovery services service provider, so our R&D expense is just a reflection of decisions our clients make. So the more clients we have and the more work they want us to do for them, that will drive up our R&D expense. So that's a healthy indicator.
Okay, finally, what's the capex plan for the balance of the year?
Well, they'll give you the big picture and you can deduce the numbers from that. So it's a $550 million program spread over many years. 350 million of that is done, complete and capitalized. Another 50 million is the run rate expected for the rest of this financial year. So that gets you to 400 million of the 550 that's been approved. 50 million of it is in flight, and then you can do the maths. The other 150 million of that will play out over the next 18 months to 2 years.
All right, that's the management of Syngene International, and the stock in today's session has seen a minor bit of gains. I think, yeah, it's up about close to 2%, but it's off the opening levels at 332 as we speak. But having said that, the markets are back in the green, so let's find out which are the Fab 4 stocks that feature in Sharad Dubey's list. Let's go across to him. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is based on the earnings, Jubilant Foodworks, which is up almost more than 7% and rising almost 18% in the last trading in the last 4 trading sessions. So basically, if we go through the numbers, the same store sales growth has risen by almost 4.9% on a year-on-year basis, beating the estimates despite the macro consumption slowdown which we have seen, as the brokerages have stated. Apart from this, even the margins grew at almost 23.9% as compared to 16.7%. Up next, we see Afla India, which is up almost 14.5% after and also touching its lifetime highs today. After signing filing 14 patents in Singapore and also USA in the areas of conversational marketing and also automation. Up next, we see RITES, which is up almost 5% after it has signed an MOU for infra projects in Ghana to promote long-term bilateral cooperation for transportation and logistics. And the last stock of the day we see is Sterling and Wilson Solar, which is up more than 2% after it has filed a letter of intent with for an engineering and construction solar farm in the Middle East for almost $635 million. So these 4 stocks are buzzing in the space today.
All right, Sharad, thanks very much for that. Those are 4 stocks in focus. Let's also bring in Brijesh Singh of Stock Access. He's joining us right now on the show. Brijesh, a very good afternoon to you. We got almost more than an hour since we started, taking a check in terms of the market closing. Have you spotted anything, while you were looking at the index or maybe individual stocks that you feel, can be traded upon?
Good afternoon, everyone. See, Devina, what I've been feeling for the index, first of all, is that Nifty, no doubt after making a recent low of, say, 11,516, after that it has given a bounce back. But overall, still with the oscillator front from our hourly chart, I don't think that much promising. and any rise should be used to going short for trading for a couple of days session is been concerned. I'm looking till Friday specifically. So if we talk about Nifty, present rate of 11,600, I'm taking a spot value, or till 11,620. If someone wants to go short, then they can go short with a strict stop loss of 11,720 and play for the target of 11,450. So I'm looking this index breaking the previous swing low, which was somewhere around 11,560, and we might try to break 11,500 also in coming days. Regarding with the stock specific is been concerned, the first stock on a sell side is Reliance Industry. The hourly chart as well as the 15-minute charts are indicating the lower rise formation, which indicates the probability of the stocks going down with the oscillator front followed by the increase in volume. So present rate of 1390 or to 1394 is a level where one can play for a short side with the strict stop loss of 1410 and play for the target of 1370, even 1355 to 1358 is the next level to watch very carefully. So they are the two levels which I would be looking on a downside. Second sell call is from SBI. The SBI is not able to cross 278 to 280 band. That has been acting as a tough resistance. No doubt the rally from a lower level has been seen, but from an oscillator point of view, the lower highs formation indicates the probability of going down. So present rate somewhere around 275 to 277, one can play on a sell side with the strict stop loss of 281, play for the target of 265. Both the call time frame to hold would be at least till Friday.
Okay. Manav, I just want to come to you on Deepak Nitrite. The stock's at 338, and I believe this would be also the live high, closer to the live high for the counter at 338. The last 4 trading sessions have been 4 to 5 trading sessions. The stock is traded positively. Do you see more upside or room for upside? It's not at the high point of the day. I believe the high point of the day was closer to around 448. It's $10 away from that. But what's the chart suggesting?
See, when we are analyzing Deepak Nitrite for a medium-term to long-term perspective, in fact, this has been one of the most outperforming stock from the mid-cap, small-cap space, and the prices were witnessing 1.5 to 2 years of sideways time correction, whereby we have now started to see a good breakout action coming into the stock with a follow-on move on the daily and the weekly perspective with a good amount of volumes. As a disclosure, we already have a technical long-term report on Deepak Nitrite, and we have given our upside target of 445 into this, which is likely to be achieved in next 6 to 8 months of time frame. Looking at the formation, the prices are still at the early stages of its breakout of its sideways consolidation move of its larger primary uptrend. So this could be just an initial spurt, but eventually we expect elongated trending move coming for this stock, and has an important support around the levels of 320 to 315 on the lower side. I would still recommend someone who's missed out can definitely look to buy this even at the current levels and on the dips, and eventually this structure is likely to see some much more legs within 6 to 8 months time frame. According to the time cycle, we could see levels of 385. Long-term target stands at 445.
Right, that's the technical view on Deepak Nitrite. Couple of other stocks as well which are hitting their 52-week high. One of them is Reliance Nippon Life Asset Management. Of course, the name's changed to Nippon Life after the change in promoter holding, but the stock's up about 9% in today's trade. And Sharad also spoke about Jubilant FoodWorks. Now remember that stock's just about 30-35 rupees away from its all-time high levels that were seen in August last year. So watch out for both these stocks. On that note, let's bring in Mridul Jalan of Sonora Advisors, who joins us right here in the studios. Hi, Mridul. Thanks a lot for joining us. Of course, the markets are looking better than the last time we met. But first, a view on these two stocks which have been doing well. Reason for Jubilant, of course, sequential improvement in the same-store sales growth number in a weak environment. And Reliance, I think the new promoter coming at helm, and of course, the exit of Reliance, the Anil Ambani group, has been viewed as a positive sign. It trades at a discount to the other AMCs. Would you recommend buying these stocks?
So Jubilant FoodWorks is now expensive. The reason the stock has done this catch-up is purely because it's a very good quasi-India consumption play. It's a cash-throwing company, and it's a big beneficiary of the tax cut which the government did. It's one of the consumer stocks which, in the consumer space, if they deliver number, everybody wants to buy because it's a cash flow generating company. At these valuations, we really will avoid the stock. It's something which we like maybe 20-25% lower than the current levels. We'll wait for the right time. Coming to Nepal Amc, it's a wonderful re-rating story. It's a perfect example where from a below average promoter in terms of market perception to a quality promoter, how the re-rating happens and how fast it happens. It was trading at nearly half the valuation to HDFC AMC. It's still doing the catch-up part. If you ask me, while we don't look at mid-caps, but I really like the name from an investor's perspective. I think investors should hold on to this name.
Okay, so that's the view on both these stocks. But otherwise, Mridul, what are you recommending to buy right now at current levels, and what are you asking your clients to completely avoid?
So what we really like is the banking space. I will reiterate my strong buy on ICICI Bank, HDFC Bank, State Bank of India. In our client portfolios, we would be 50% weighted on the banking and financials, with ICICI, Axis and SBI being the top 3 holding along with HDFC Bank. What we don't like at these prices will probably be Z because of the overhang which is happening with the promoter pledge and stuff. Once that is over, once the dirt is settled, it could be another re-rating story, but currently it's something which we will be watching closely with a negative view. What we actually recommend is slightly on the short side is Berger Paints. The reason for that is very simple. Berger Paint historically has never traded at a premium to Asian Paints in terms of valuation. At current prices, it is 20% premium to Asian Paints. Now, Asian Paints itself is trading at a historical high in terms of valuation, which means Berger is trading at a valuation which is a lot of discomfort to us. Any negative in terms of margins or growth will impact the valuation a lot. If you look at Asian Paints' result, they disappointed on margins, which clearly means that they are going aggressive on market share. If that is affecting Berger, which we'll see in their numbers, we'll be very, very cautious on this stock.
Okay. I think Indian Bank is just reporting its numbers. The stock has seen a big move. Gross NPAs are lower on a quarter-on-quarter basis at I think 7.2%. Net income at 359 crores was an estimate of about 328 odd crores. Stock's up 14.5% right now post the numbers. Volumes have shot up as well, about 5.43 million shares, 145 on the stock. We'll come back and discuss a lot many more names within the banking space, financials and BFCs with Mridul. But time now to take a look at what dealing rooms are recommending. Yatin Mota and Darshan Mehta, they're here with their channel checks. Good afternoon, guys. Darshan, let's start off with you.
Yeah, so one of the stocks that will report numbers today is NIT Tech, pretty much trading near the day's high. Dealers anticipate that the second quarter numbers that will be reported by the company today will be on the stronger side. So that is something that's been spoken about. Jubilant FoodWorks from yesterday was moved. The move today also continues. It's up almost 8% in today's trade. In fact, all the major brokerages have raised the target price. There are target price even in excess of 1800, and some of the funds have been actively accumulating this counter. So Jubilant FoodWorks is being spoken about, and IGL is the last one. It's down in today's trade, but at lower levels, dealers indicate that some of the HNIs are actively taking positions and accumulating the counter. But Yatin has a few more.
Darshan, SBI, that is one stock which is in good focus. They will be reporting their quarterly earnings very, very shortly. But ahead of that, dealers are indicating, a buy on the stock at low levels. They are advising their clients to take selective positions in PSU stocks like SBI, 2% higher for that one. Decent volumes in trade today, both in the cash segment as well as the F&O segment. Apart from that, Maruti is one stock. They will be reporting their quarterly numbers tomorrow. And in general, for the auto pack, we have seen good buying coming in at lower levels. In fact, today also Bajaj Auto reported a strong set of earnings post, which the stock went up by almost 2.5% when it beat street expectations. Maruti also, dealers do expect that the worst is over when it comes to the price in the stock fall in the short term, and hence they are indicating a buy here as well. And finally, Havells is one stock wherein dealers are recommending a BTST strategy. If you look at the results, the segment results, Lloyd, which is an important air conditioning segment for them, has reported weak growth and losses at the EBIT level, because of which the overall results have been slightly weaker. And in general, at lower levels, we are looking at some short covering which happened in the stock today, and hence on the basis of F&O trends, dealers are recommending a BTST strategy as well.
Okay, got that. Thanks very much for that, Yatin. Rizal, I just want to pull out from Yatin's, chat on SBI. Is there anything that you would like within the PSU banking lot that would?
SBI is our top pick. We both like it both in the short term and the medium term side. If you analyze the results of Axis Bank, HDFC Bank, which have announced the numbers, the corporate slippages are pretty much in the control. They have only come from BB and below book, which has already been recognized and disclosed by the management. I expect ICICI and SBI both to give us similar kind of numbers. In terms of valuation, now SBI and ICICI trades at much cheaper to the peers, and hence they should do the catch-up game, in both in the short term and the medium term.
Okay, ICICI Bank and SBI both is something what Mridul likes from private sector as well as public sector banks. Let's quickly get into those closing strategies from our technical experts. Manav, let's start off with you first. Your top top closing idea for today?
Yes, I have two bets. My first buy call will be on Bank of Baroda. Like we have seen, most of the PSU banks are in the deep oversold levels, and Bank of Baroda, after a good 8 to 10 sessions of sideways consolidation, has shown some sign of breakout, at least on a daily chart, and the volumes are also suggesting for this breakout to hold. So Bank of Baroda would be a buy for an BTST trade, a stop loss of 90 on the lower side for an upside target of 96.50. My second buy call will be on Voltas. In fact, we've seen this stock being in a very strong momentum rally and is right now trading above its important crucial resistance of 685, which was its previous important resistance. So now this breakout has accompanied by good amount of average volumes, in a sense in the near term perspective this could see some good amount of follow on rally. So a stop loss of 695 for Voltas on the lower side for an upside target of 735.
Okay, Brijesh, what about you? Your top calls?
See, I'll go with Voltas also, what Manav has said, and the stock is somewhere around trading at 708, and if I'm not mistaken, if it will be high somewhere in 730. From past 30 minutes or an hour, we are seeing a good amount of buying in it. So keeping a stop loss of 699, one can look out to go for a BTST for the new 50-week high, and I'm looking somewhere around 728 around as a new where the supply would be coming. Second, BTST would be an NCC lower highs formation, the higher lows formation on the hourly chart with increase in volume indicates the trend to continue on the buying side. For 56 or 56.10, the stock has been quoting. So present rate can be used to go long with a strict stop loss of 55 before the target of 58 followed by 59.5.
Okay, so those are some closing strategies coming from our technical experts. Remember, we'll also be watching out for HCL Technologies, which will come out with its numbers. Ahead of that, since the morning session, the stocks registered gains, and currently it is trading around the levels of 1,098 at almost at the highest point of the day, up 3%. Mridul, I know you're advising your clients to stay away from Infosys after what's happened, but within this pack, there was that valuation gap between Infi as well as TCS, which was closing, but after yesterday's fall, once again that gap has widened. Right. In terms of valuation bet, what do you choose in the large cap ID space?
So we like HCL at these prices. It's more of a tactical buy rather than anything. Structurally we don't buy IT, but tactically we do. So if you look at HCL, the last results showed the highest quarterly growth on the organic side of the business, which bet some multi-quarter. What they also guided for was the trend to continue in this quarter. They report their number today. My sense is the stock has not re-rated since last 3 months because investors want to see a follow-on. If they deliver the similar kind of result as they did last quarter, then the stock is pretty cheap. I think it's trading at around 12 times, 13 times on the forward earning, while TCS is still at 18 times.
Yep.
Now, what happened in Infosys may benefit SCL because it's another large cap in the similar space. So investors will find more solace in SCL if they deliver numbers and there can be a trust on those numbers. The only problem why SCL trades so much discount is because they don't throw the kind of cash which other IT companies have. So that's a point of concern we will watch out for, but we really like the stock at these prices.
Okay, that's fundamentally a positive view on HCL Technologies. Manav, would you trade ahead of the numbers after the gains that we've seen today, HCL Technologies?
It's a difficult bet, honestly, to take at the current zone. The prices have been in a broader sideways trading band since past few weeks. The resistance for this stock is at around 1110 to 1120. So until unless we don't see a breakout above this, I don't see any good positive move. And on the contrary, 1060 is the support. So this is a broader 60 to 70 points range where HCL Technologies has been trading. So far there is no bullish breakout at the moment, and looking at the IT space, I think it's better to take a bet post the results once the prices eventually closes beyond one of the trading bands, and then only is the right time to actually go for any trading bet into this stock.
HCL Tech nonetheless is the top gainer on the index, and remember 1100 was its buyback price a few months ago, so it's back at those levels of 1100 or 1097 is where it's trading at. I want a quick chart check on Z at 241. Rajesh, what would you do?
See, Devina, overall the trend has been negative. So I would be suggesting to go short again on the rise. The level to go short would be somewhere around 250 to 254 with the stop loss of 264, and again look for the target of 220 and below that.
Okay, that's a technical check on Z, which is down about 3 to 3.5%, and just marking few other stocks which are doing well. IRB Infra, I think that shot up on good amount of volumes. It's up 19% or so, and the move has just come in the last 5 to 10 minutes. I think numbers also came a while back, so maybe it is a reaction of the numbers my producer confirmed. So watch out for IRB Infra. Riddle, before we thank you, anything from this space, infra space?
We only like Larsen. We stick to large cap. Larsen has the execution capability, has the track record, so we are long on Larsen. And the other we like is infra. We play through cement, where we like Ultratech and Sri Cement.
Okay, were you disappointed with Ultratech's volumes this time around?
For the quarter, yes, but my sense is it's a structural story where cement volumes will grow as the government emphasizes on investments in India, and Ultratech is a very good play there, while the Century merger has its own impact.
All right, Mridul, we leave it at that note. You continue taking refuge to quality and large cap stocks. And having said that, just 3 to 3.5 minutes to go for markets to shut shop. In all likelihood, we could be closing above the mark of 11,600. As we were mentioning, a couple of other stocks which have gone up in trade in just a while back is Sadbhav Infra 2. And also among your F&O gainers today, Jubilant Foodworks. I don't think we've taken a technical check. Brijesh, very quickly before we wrap, would you, if somebody is already taken a long call on Jubilant Foodworks, would you advise carrying that call or book profits?
No, the trend has been positive, Navneet, and till stock has been trading out 1490 or say 1495, hold on to your position. If I'm not mistaken, 1578 is a 52-week high. Probability that level would be crossed. It is heading for the level of 1625 to 1640 zone.
Okay, gentlemen, stay on with us. We'll come back to you for some closing thoughts. But this is how we're going to wrap up the day's trade on the index. We're going to hold probably 11,600. That's marginally higher. Not at the highest point of the day, and not at the lowest point of the day either. 21 odd points higher for the Nifty 50, Nifty Bank. Also a similar gain of 50 odd points, 29,461, while the Sensex trades with marginally higher gains. In terms of the mid caps and the small caps, they're doing slightly better. The small cap index in particular, just just under 0.5% gains coming in there for the small cap index, with the mid cap index trading slightly flat. Coming to individual stocks and what's contributed on the upside and the downside on the index. Starting off first with the top gainer, HCL Tech, that's due to report its numbers today, closer to 1100, which was its earlier buyback price, come back to those levels. Eicher Motors is the other one, 2.5% higher. Maruti up to 2.5%. Titan, remember, life highs for the stock. It's surpassed 1350. Britannia is the other one that's looking good. SBI 1.5% higher. Hero MotoCorp reports numbers, so watch out for all of these names. In terms of losers, Adani Port is down 6%, Bharti 3.5% under. Z looks weak today. You've got Vedanta, Grasim, Yes Bank, Reliance Industries dragging the index lower a bit. But that's the scene with regards to the large cap space. What's happening in the mid cap space, Nandini?
Well, it was more or less a range-bound session, but nevertheless, there were a lot of individual stocks which moved around. Let me start off with the gainers, and starting off with Jubilant FoodWorks, a stock that we've been discussing on all our shows. Fourth straight day of gains. The numbers came in yesterday. Sequential improvement in same-store sales growth number is the reason, and also brokerages upping the target price, why you saw that stellar move in today's trade as well. In fact, on the future side, for the second straight day, you saw massive build-up on the long side. SRF is the other one which saw good gains. In fact, there was some buying seen, and the stock's finally closing with gains of 4%. Century Textiles also registered fourth straight day of gains. The stock was up yesterday by about 10 to 11%, and follow-on buying continued today as well. Indian Bank reacted positively to its numbers, which came just half an hour back. So post the numbers, the stock rallied about 11 to 12%. SH Kelkar, I think the numbers come out day after tomorrow, and just in the last hour of trade, I think there was some buying seen for this one as well, up 10%. Affle India continues to do well, and RNAM saw good gains. In fact, the stock was up about 9 to 10% in today's trading session, almost 10% closing at the highest level. On the losing side, a lot of losers. Newgen Software reacted negatively to the numbers, which was a weak quarter, actually locked in lower circuit of 20%. RBL Bank, weak set of numbers, asset quality deteriorates, but the stock recovered nearly 11 to 12% intraday, but still closing with cuts of about 9%. Indiabulls Housing saw some bit of correction. Also, Havells came out with its numbers where margins deteriorated on year-on-year basis, and also something like Ujjivan Financial didn't have a great session today. That stock succumbed to some bit of selling pressure, finally closing at the lowest point with cuts of over 3%.
All right, this is what you've got in terms of your market closing. Then for the Nifty 50, you've got gains of 26 odd points, 1/4% higher. Nifty Bank up 1/3%, that's 90 points up. In terms of individual contributors, obviously it was some of the larger IT names, HCL Tech, which did okay for itself, and banks also contributed. ICICI Bank moved up in today's session, and TCS and Infosys took some support in today's trade after that big 15% drop yesterday. On the drag, you've got Reliance Industries, Kotak Mahindra Bank, Adani Ports, which was down 6 odd percent. But all in all, fair enough for today.
Yep, and let's also take a look at the market breadth. Remember, yesterday in the last half an hour or so, we did see the market breadth deteriorating, and I think that was the case today as well. So final closing is just about even Steven when it comes to the entire listed universe. And also, let's take a look at the volatility index, which continues to be on the higher side, but we did see some bit of cool off coming in for India volatility index, which is closing with cuts of 2%.
All right, that's what you've got in terms of the market closing. And quick thoughts from our technical experts as we wrap up trade. Manav, what will you be watching out for trade come tomorrow?
See, I think tomorrow the eyes will definitely be on the PSU banks, post the SBI results, and most of the PSU stocks are bouncing from its oversold levels, and the banking index has managed to sustain and close about 29,000 support, 29,000 levels. So I sense after a few days of consolidation, there is a very high likely chance for an upside breakout. So stocks like SBI, Bank of Baroda, and even Canara Bank, since they are in deep oversold levels, could see a short-term spurt rally. But these bets should only be taken as a trading opportunity. I still don't see any big medium-term to long-term bottom formation as yet, but it is just going to be a trading bounce for the near-term perspective. And the auto as a space would continue to see that outperformance and relative outperformance versus the other large stocks. So I think autos and the PSU banks should be the stocks to be viewed for tomorrow and coming few trading sessions.
Okay.
Okay. Before I just go across and get Brajesh's view, just JSW Steel that's reporting its numbers on your screen. Expectation on the profits was about 512 crores, which was expected to be one of the lowest in multiple quarters. But they've actually not done a bad job. It's come in higher by 20%, but that is also on the back of a big tax gain that they've got this time around. So 1850 crores in terms of a tax gain versus an expense of about 936 crores last time around. There is another income component as well of about 156 odd crores. Revenues are slightly softer than what the expectation was. So 17,570 crores in terms of revenues versus an expectation of 17,906 crores. So on the revenue front, a slight bit of a miss, but the tax income has supported the bottom line for JSW Steel. Vikas Singh of Phillip Capital is joining us right now on the phone line. Vikas, what's your takeaway from the initial numbers of JSW Steel?
So primarily, if you look at the PAT number, so as you rightly pointed out, is the tax write-backs which are yesterday for them. But I just want to bring your notice to on the operating performance also. If you look at the operating performance, this government grant of 466 crore, the VAT and GST incentives which was related to early year has actually inflated the operating performance. Otherwise, hadn't the company got this 466 crore of VAT incentives, they would have reported a lower than expected operating performance as well.
So all in all, you're saying that this is just...
So numbers are not that great all in all. It's just that VAT incentives which have come back and the tax write-back. These are the two components which have led to a little bit better than what the street was expecting.
Vikas, I think the other metric which the street was watching out was the offtake. Of course, we did have the volume number for the production numbers for the quarter gone by, which was down almost 10 to 11%. The saleable steel sales, and this is the standalone performance of JSW Steel, is at 3.6 million ton, which I believe is at par with what the street was expecting for the standalone business. The operating EBITDA is at 2796. Is that in line with what you guys were throwing up? Because this time around, EBITDA per ton was expected to be on the lower side on back of lower realizations and also lower steel prices.
Yeah, so the prices are definitely lower. So if you look at the total realization wise, so we believe that on a blended realization basis, we have already gone down by 3.5 to 4,000 rupees. But just on this operating performance side, this 2796 has included that 466 crore which I was talking about. So hadn't that VAT incentives have come, the operating performance would have been poorer than what street was expecting. Most of the people in the street was, as you rightly pointed out, at around 2,700 crore rupees. So adjusting for this government grant, it could have been 2,300 crore, which was actually a poor performance than what people were expecting.
In fact, that's the management commentary also, which has come by weaker activity levels in the back of muted investment spend and credit squeeze and slowdown that has been seen in the automotive sector that has resulted in overall subdued steel demand, which was nevertheless known because of monsoons. It is seasonally a weak quarter for steel companies, and also the slowdown seen in the automotive space has also hampered their growth. Vikas, what's the stock call? Looking at these numbers, are you going to revise your target price?
So basically, I am already on a lower end of the consensus. So I don't think that my numbers would be revised significantly because my EBITDA target was somewhere around 2,690 crores. But then obviously on the back of this tax write-back, I think my EPS might have some changes. Overall, I probably would be maintaining my sell call on this stock.
All right. The margins have also come in lower on a consolidated basis, 15.5%, and that was exactly what the street was pegging in for the margins. In our estimates as well, we'd factored in about 15.5% in terms of margin numbers versus 22.8% on a year-on-year basis.
Okay, Vikas, we'll leave it at that note. Thanks a lot for joining us and taking us through your views on what to expect, or rather, what did you make of the JSW Steel's number, which were expected to be on the weaker side, and the reasons for the same were seasonally weak quarter. Steel prices globally have been falling off, so of course that's impacted them. And in order to offset that, the company has started making more of exports. It's what they've highlighted in their release as well. They've increased exports tactically this time around, which has surged 68% on year-on-year basis. basis to about 1.09 million tons. Let's see what that does going forward to the stock of JSW Steel.
I think they've also deferred closer to 4,700 crores worth of spending to the next fiscal, so we'll watch out for all of that and more. But on that note, all right, we still have Brijesh. So Brijesh, quickly give us your sense of what we need to keep in mind as we set up for trade tomorrow, and if you have a quick call on JSW Steel from a technical standpoint.
As I have said earlier also, Nifty is not looking promising to me till Nifty is not able to cross 11,720. So any rise or precedent can be used to going short. SBI as well as the Reliance are little bit bearish side. No doubt SBI result is on the 25th, but technically I am been bearish till SBI doesn't trade above 281. Regarding with the JSW Steel has been concerned, overall trend of the chart suggests me that there might be a little upside till level of 230, 235. So at that level one can look to go short with the stop loss of 240 and play for the target of 205 to 207 zone. Even if someone wants to go short at the present rate, I would be avoiding, but somehow it would trade somewhere around 230. That ideally it would be good for a risk reward ratio is concerned.
All right, Brijesh, we'll leave it at that. Thank you so very much for joining us this afternoon. And on that note, it's a goodbye from Navneet, myself, and the entire team that's put the show together. Thank you so much for watching.
So people, when they invest and the calls go right, their investment decision goes right,